Today, Jerome Powell returned to Capitol Hill and dropped a bomb of news on the financial markets. We heard a lot of very hawkish talk coming out of Jerome Powell today. And today's news has made a huge impact on Wall Street, people's expectations, and my expectations as well. It's starting to change a little bit. Things may not be as clear-cut as they were even just a few weeks ago. CNBC writes that the Dow sheds more than 500 points, sell-off intensifies as Powell comments on higher rates which spooked investors. Another headline here from Real Money says that the bulls suddenly become wary of the hawk circling over Wall Street. The day has just ended on Wall Street looking at the S&P 500. We are down about 1.5%. And in the last video, I was saying that if we rallied and created a lower high here with continuation back to the downside, this could be a very bad thing for Bitcoin. So let's discuss today's news and the charts in today's video. What is up, guys? Welcome back to the channel. Today is March 7th. It is Tuesday, and Bitcoin is now trading just below 22,000. Why is that? Well, it's because of the news, and it's because the stock market had a negative reaction to Jerome Powell speaking on Capitol Hill today. What we saw from Jerome Powell today was quite a lot of hawkish rhetoric, and CNBC summed up the speech in this article saying that stocks sold off sharply Tuesday after comments from Federal Reserve Chair Jerome Powell suggested that rates may need to go higher for longer, fueling fears of a potentially larger hike at the central bank's next policy meeting towards the middle of this month. Dow Jones Industrial Average sheds 530 points. NASDAQ dropped 1.2%. Two-year Treasury yields jumped to its highest levels since 2007 at 5%. And Jerome Powell's comments indicated that the Fed may consider a larger rate hike than the last 25 basis point hike. The Fed may consider a 50 basis point hike. Might, right? They might. So this is definitely spooking the market, guys. It's just what it is. This is just today's news. Powell's comments raised the stakes for February's job report, which could show a resilient job market that allows the Fed to keep hiking. Today, Jerome Powell was talking about 7% unemployment, rates staying higher for longer. The terminal rate expectation has been going up to 5.6% now, and the expectation has now been shifting more towards rates staying higher for longer, possibly more aggressive rate hikes. So today's news is kind of like a bomb being dropped on the market, and this is definitely going to make people less confident. For the past few months, it seemed like a recovery was much more possible, but after what we saw today, it does seem like, well, things may stay pretty unstable and pretty shaky for the time being. We may actually end up seeing a market that is much more sideways than picking a direction, I think. So we may actually end up seeing a lot more instability in the markets than previously expected. People are, of course, also discussing the possibility of a much larger recession, etc., etc. And so all of this has certainly made an impact on my outlook on the market. You know, I'm not going to sugarcoat it and just say that everything is going as expected or whatever. This is definitely changing my outlook. I think that things may not be as clear-cut as they once seemed. And the thing that people don't want to hear, but that is very apparent, is that Bitcoin's performance is going to be very, very dependent on the stock market. A lot of people are, wondering, do I think we're going to have a 2001 or a 2008 scenario? I don't necessarily see any particular reason why. I don't see yet any sort of major crisis that would incite something like 2001 or 2008, but I'm certainly starting to think that things may end up being much more sideways and uncertain and unstable than we once previously thought, meaning that the markets could, end up testing down, seeing more sideways ranging for the next few years rather than just one direction, as, the past decade or so has really just been one direction up. So I think that we're actually likely going to have something that resembles more, like we've been talking about this a lot. A lot of people have been talking about this, but something more like the 60s to the 80s, where over the next 5 to 10 years, maybe we hit all-time highs, but we actually don't we don't maintain the all-time highs. This type of sideways market with, rising interest rates. If we look at the Fed funds rate, the last time that we were seeing higher highs on the federal funds rate was back in the 60s to the 80s, right? After the 80s, it was lower highs on the federal funds rate. And now for the first time since then, we are seeing higher highs on the federal funds rate. But if we just think about the more logical conclusion here, if the Fed is going to be possibly continuing with aggressive rate hikes and the terminal rate is going to be increasing and maybe inflation is not tamed as much as people thought even just a few months ago, it could mean that Bitcoin spends more time below the $30,000 level than we thought previously, right? Where we actually spend most of this year below 30K leading into 2024, and then Bitcoin gets much more bullish going into the halving, where we look to test a new all-time high. You know, people always like to pick the most extreme scenario, right? Now we're looking at the S&P. A lot of people are probably going to start drawing, you know, charts that mimic 2001, 2008, where they're going to draw a line like this and just have it go straight down. I think that it's likely going to be somewhere in the middle. We may not have a crazy crash like 2001, 2008. It may just be something that's more sideways, where we do have massive runs to new all-time highs going into 2024, but they're not being sustained as much, right? Similar to the 60s to the 80s. Pretty wacky price action, and people don't like this stuff because this type of price action is not clear cut, but the market is not always going to be clear cut, guys. And so this means that Bitcoin may have cycles that end up being more compressed. A market like this, it's not a great drawing, but a stock market that's seeing new all-time highs but not sustaining them and being sideways, what does that look like for Bitcoin? What it could mean is that things are just more compressed. So first of all, Bitcoin in the previous cycles has always found a bottom above its previous all-time high. This time, we've actually gone below the 2018 all-time high. So it's already getting compressed. And what we can see is further compression of the cycles, right? If the stock market is doing something like this would mean that Bitcoin, sure, it could, you know, maybe remain below 30,000 for most of this year, but then end up getting very bullish for the 2024 halving, but ultimately stays more compressed over time. See? So that the cycles become a little bit more flat. This is not a perfect drawing, but I think you guys understand what I'm saying. Something along these lines would make a lot of sense if the S&P is also playing a flat market scenario. Again, this is all just my immediate reaction to all this news, so take it with a grain of salt. Things, of course, can always change. My view can always change when new data is presented, and maybe I'll have a different expectation towards the end of the year. Ultimately, this is still long-term bullish, right? The more short to medium term becomes uncertain. The way that the price plays out for the next 10 months, 9 months is a little bit more uncertain. Maybe it's a little bit more subdued, but ultimately I do think that the markets are probably going to have a major run up, both the stock market and Bitcoin, going into 2024. The question is, how is that going to look like? Are we going to sustain the new all-time highs or go sideways like we did 60s to the 80s? And if we do, a more compressed cycle would be the more likely outcome. So this is just a very speculative guess based on today's information. Of course, this can all change. I still have to digest all this information. Not 100% sure just yet. This is only a video talking about an immediate reaction to the news. So we'll see as time goes on. Hope you guys enjoyed this video. Smash the like, subscribe, and I'll see you all in the next one.